I'm Matt Bouchard with REIT.com, and joining me today is Calvin Schnure, NAREIT Vice President of Research and Industry Information, here to talk a little bit about the apartment REIT market and the outlook for multifamily housing. So Calvin, what's your take on the recent news on vacancy rates?
As you know, the apartment sector has done quite well over the past 2 years. There have been some growing concerns that it might run out of steam, that there might be some problems ahead, but what we've got recently suggests that it continues to improve quite well. If we can see the first slide here, the vacancy rate, Census Department reported, fell to 8.8%. Now this is down more than 2 percentage points from its peak in 2009. It continues to move down. It's actually down to the lowest since 2002. Now what's behind this is we've had very strong growth in demand for rental apartments. It's up 4% over the past year, which is a quite strong number. And the first quarter alone was an 8% gain. That's the strongest growth in demand for rental apartments since 1993. So we're seeing that the apartment sector still has quite a bit of momentum.
And you mentioned some possible concerns to that outlook. What might those be?
One concern on a lot of people's minds is how much new supply might damp the improvements in the future. There's been a lot of increase in construction. You have to keep in mind, though, that construction is coming from very low levels. If we look nationwide, multifamily housing starts had trended a bit over 300,000 over the decade before the crisis. They fell below 100,000. They're double what they were 2 years ago. So when people are saying construction is rising, new supply is coming online, on a nationwide basis, what they're saying is it's coming back, but it's still not back to what the trend growth would be. Now, of course, in some markets, you could see more supply and less. This is just looking at the national picture. But overall, the shortfall of construction relative to the long-run average is about 500,000 units. It's going to take a lot more construction for us to make up the 500,000 shortfall and get to any point where supply is an aggregate concern. There's another issue that I'd like to call attention to that's even more important, though, and that's the number of households that have doubled up during the financial crisis. Could we see the next slide? This is showing the number of households that doubled up during the crisis, that as a percent of total households, it rose by practically 3 million households since 2008. So what this says is there are 3 million households that used to be existing, used to have an apartment that they rented, used to have a home that they rented, they owned, and now they've gone into, it could be doubled up with roommates, they could be with their parents, they could be living with their in-laws. This is 3 million potential renters, 3 million units that could be rented, mostly as the job market improves. Now this is a strong force that's supporting future rental demand. A lot of the growth that we saw in rental occupancy in the first quarter was some of these people who may have benefited from the improving job market who are coming out and signing leases. Now the key thing to keep in mind is these 3 million households that are waiting for a stronger job market are only looking at a total of less than 4 million total vacant units in the U.S. So even though the U.S. had overbuilt in the middle of the last decade, right now these doubled up households represent enough pent-up demand to soak up most of any excess supply that's out there.
So Calvin, it sounds like your view is a little against the grain in terms of the apartment sector looking at the end of its good run.
As the job market improves, as the overall economy improves, these millions of households that are doubled up currently are going to be looking for some place to live. That's going to give the apartment sector legs for quite a while.
Thanks a lot, Calvin.
My pleasure, Matt.
For more on this and other news and analysis, be sure to visit REIT.com.